stock. Just buy Uber, bro. Don't worry about unprofitability. Don't worry about negative cash flows. Just take all your money and YOLO Ubero. Welcome back to Strongman Personal Finance. Did you like that intro? Or was that not professional enough for you? You want me to wear a little suit like a financial advisor?
And be really professional. Let's talk about stocks today.
Is that what you want? Well, if that's what you want, get out of my freaking channel! Anyway, today we're going to talk about Uber stock. Because it recently exploded recently. And I bet you there's a bunch of clowns on YouTube that bought Uber and then it went up temporarily. And now they're like, oh my god, I'm so genius, Mr. Genius, oh my god. Uber stock is freaking stupid, okay? We're going to go look and see why Uber stock, Uber stunk, unprofitable trash, went up recently. And I'm going to show you why I don't think you should buy the stock yet. Or ever, okay? You don't have to buy Uber. It's okay. And even if it goes up even more, you're not missing anything. Because you can buy better stocks. Anyway, let's go look at Uber's recent 8K filing with the Securities and Exchange Commission. And we're going to see why Uber exploded. Let's go. So here we are. Uber's most recent Form 8K date of report, September 21st, 2021. This, 6-page document is the reason why Uber went up by billions or millions of dollars, whatever. 8-9%. So let's see why all these clowns YOLO'd into Uber over the last day and a half. The hot news, hot off the press. Based on quarter-to-date trends, which include Uber Tech, first months of adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization. Profitability in the months ended July 2021. Profitability. In August 2021, Uber is updating its Q3 outlook previously provided on the Q2 2021 earnings call. Let's see what happened. Gross bookings for Q3 are now going to be between $22.8 billion and $23.2 billion. That's compared to $22 to $24 billion from the previous report. So basically, they made bookings more accurate, more specified, but they were right in the correct range. And of course, adjusted EBITDA between negative $25 million and $25 million, which was a change from better than a loss of $100 million. So the main difference between what they put out in their earnings call for Q2, for their guidance going forward, and what they now project for Q3 is that they will have adjusted EBITDA between negative 25 and 25 million. So they may actually have a profit due to EBITDA if you adjust profit like 1,000 different ways and, exclude a bunch of expenses. They might actually turn a profit instead of losing $100 million like they thought. Wow, that's very impressive. Now here's why I think this is freaking BS and why I think it's stupid. This stock shot up 8-9%, whatever, based on this crap. Okay, revenue's basically the same as they projected, and they might have a profit. Let's see what they define adjusted EBITDA as, okay? This is one of those stupid metrics they use where the company isn't profitable on an accounting basis. What they do is like, well, if you don't include this expense, and this expense, and that expense, and this, and that, and this, and that, then we're profitable, see? So if I ever start a company, I'm gonna have adjusted revenue profitability. And basically we're just gonna look at revenue. That's it. That's the only, metric of profitability. So I'll be 100% profitable, even if I'm losing massive amounts of money. That's what adjusted EBITDA is, okay? Let's see. There was a definition. Here we go. We define, and listen to how they define their profit. Adjusted EBITDA as net income, excluding income or loss from discontinued operations, net of income taxes, net income attributable to non-controlling interest, net of tax, provision for income taxes, income from equity method investments, interest expense, other income expenses, depreciation and amortization, stock-based compensation expense, certain legal tax regulatory reserve changes, goodwill and asset impairments, acquisition and financing expenses, restructuring and related charges, and other items not indicative of our ongoing operating performance, including COVID-19 response initiative related to payments for financial assistance to drivers personally affected by COVID-19. Wow. So all they got to do is say, we're profitable as long as you exclude all these freaking expenses, okay? It's freaking stupid. You don't want to use this metric to judge profitability, especially excluding depreciation and amortization. I talked about that in another video, but depreciation is recognizing the cost of a long-term asset over its useful life. Because when you buy an asset, a capital asset, it actually costs money to buy like a building or a fleet or whatever. And you're spreading that cost over that fleet or building's useful life. So I don't see why you would add back depreciation because it's a non-cash expense, because you're definitely going to pay for that building. It's freaking stupid. Okay? So this was the reason why the stock freaking shot up. We're now going to be profitable potentially based on this random freaking metric that we pulled out of our butts. Isn't that freaking ridiculous? Now, let's go look at Uber's recent financial performance. Let's look over the last 3 years, their annual performance, and then we'll go look at their most recent quarters to see how profitable they are. And we'll see. Let's go do some analysis, okay? It's very exciting. Very excited to see how profitable Uber is. So, let's start with the income statement. We're not going to look at the balance sheet right now. So in 2018, they had a profit of $997 million on the accrual basis of accounting. And the reason that was because of an other income. Now, we can actually go look and see what that is. But they had some kind of accounting adjustment of almost $5 billion. They lost $3 billion from operations, but due to this accounting adjustment, they were able to become profitable on the accrual basis of accounting. The next year, 2019, they lost $8.5 billion on the accrual basis of accounting. 2020, $6.7 billion loss.
Wow, that's really incredible, okay?
And of course, weighted average shares used to compute loss or profit. They have been issuing shares like freaking crazy. In 2018, there were 443 million shares. Now, in 2019, there was 1.2 billion. And in 2020, there was 1.7 billion. Holy freaking crap. But of course, they adjusted their EBITDA profitability. So you might as well just buy the stock and make it go up 8%. Let's look at the statement of cash flows. God, this is so stupid. So stupid. Just don't count this, and don't count that, and don't count this, and then I'm profitable. Oh my God, I'm Uber. 2018, cash flows from operations. They burned, just from their operations, $1.5 billion. In 2019, they burned $4.3 billion, and in 2020, they burned $2.7 billion freaking dollars. This is incredible, okay? They are not profitable on the accrual basis of accounting. They were for 1 year, but that's because of a special adjustment, which is usually a non-cash adjustment. And on the statement of cash flows, they're burning money like freaking crazy. And of course, they're issuing loans. You can look at the balance sheet to see what that is. And of course, they're diluting the crap out of the current shareholders. Wow, that's amazing. Even their most recent quarter, I mean, they're still not making money. It's freaking ridiculous. Why would you buy this company? Because of some stupid adjustment to their freaking EBITDA. But whatever. You know, I'm just a moron. You know, just go buy Tesla or something. Anyway, so for the last 6 months, ending June 30th, 2021, this is very recently, last 6 months, they lost $2.7 billion freaking dollars from operations. But, of course, they had an other expense, which you can see in the statement of cash flow, or other revenue, which increased their profitability. So they had a profit on the accrual basis of accounting of $990 million. Now, let's go see why that was. So you can go to the statement of cash flows, and on the statement of cash flows, if they have a one-time like non-cash bump in their revenues, that's actually subtracted out, and that actually tells you what happened with the cash for the company. So in reality, even though they were profitable on the accrual basis of accounting, they actually had a net outflow, which means they lost money on the cash basis of accounting, of $952 million over the last 6 months. They're not profitable, okay? And I bet you if their next freaking quarterly statement comes out and they have a profit with EBITDA, even then, I bet you their statement of cash flows is going to have a net outflow from operating activities because these clowns freaking manipulate stuff. Now, the reason they were profitable on the accrual basis of accounting was because of a gain on a business divestiture, which is subtracted out on the statement of cash flows, and unrealized gain on debt and equity securities. That's why they had a profit in the last 6 months on the accrual basis of accounting. That's why you need to look at both statements. So, what do I think? This is a freaking article. It's so stupid. What do I think?
Uber could post first adjusted profit this quarter as ride demand returns.
It's freaking stupid, okay? There is no reason for you to YOLO into the stock because they gave you new guidance, especially when they're losing freaking money and diluting the freaking crap out of you. So the fact that this went up 8% in early trading on Tuesday is freaking ridiculous, okay? You need to go read these reports and not just trust these stupid articles. Oh, adjusted EBITDA, a profitability metric that subtracts out a ton of expenses. They might actually be profitable in the third quarter. Wow. Freaking stupid, okay? So, what do I think about Uber? I think it's a trash stock. I think it's freaking garbage, okay? I'm not touching this stock. I don't care if it went up recently. I don't care if it goes up in the future. I'm not going to buy a money-bleeding, diluting crap hole company. And if you don't like it, you can call a freaking lawyer. You like that? Anyway, that's my thoughts. The recent bump was stupid. I wouldn't buy into Uber. I wouldn't be intrigued by it. I would wait for profitability. There's plenty of other companies out there where you can probably get, a more assurance of a better return. Anyway, that's it. Like, subscribe, tell your friends about me. Don't hate me. I'm trying to help you. And y'all have a wonderful day. Cheers!